This is probably entries right now or additions to my already established positions. Probably the easiest investment I've ever made in my life.
Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. As you can probably tell by my background here, we have our resident uranium expert, Justin Huhn from Uranium Insider, back on the show. Justin, thanks for coming back on the show.
Good to be back, Steve. Yeah, good to see you.
You too, sir. You too. Okay, we'll start out like we always do, macro. Nuclear is growing globally. And at least in my mind, demand is very likely to be more in the future than it is today. Near as I can tell, sentiment among the populace is becoming more in our favor. What is your current assessment of the uranium market?
My current assessment right now is I stated the other day, I can't remember who I was speaking with, that from a fundamental macro perspective, especially with the consideration of the correction that most of the stocks in the space have gone through over the past year or so, this is probably entries right now or additions to my already established positions. Probably the easiest investment I've ever made in my life. It's difficult to put into words and to wrap up all of the fundamentals into a soundbite, but basically nuclear power plants have incredible sunk cost, and without the fuel, to quote Cuppy, they're basically just multi-billion-dollar paperweights. The fuel cost for nuclear power plants is negligible relative to the amount of money that is spent to keep them operating, and of course the sunk cost. So enrichment is about 5% of their operating cost. U3O8 itself is about 3 or 4% of the operating cost, and the whole package of the fuel for the reactors is considerably small relative to the total cost of operating it. So when we talk about all of the various elements across the fuel cycle that are developing right now, and the rising demand and the increasingly constrained supply situation for uranium, it's the price trajectory here going forward, it's as close to a guarantee as I've ever seen in a commodities market. So what makes it difficult is the equities don't necessarily always follow every piece of news. They tend to either follow the spot price or the flows of capital, both of which have been stagnant, at least in recent past. So we have this very unique situation where it's never been more clear to me where this is about to go, yet we have very depressed sentiment and equities that are basically just chopping sideways, if not slightly moving down, depending on the stock. So that makes people frustrated. And it seems to me like people are even more frustrated with sideways action than with the stocks going down, because if the stock is plummeting, if a stock is plummeting, you have a couple of actions you can take. You can get aggressively long, or you can capitulate and say, I can't take this anymore. When it's going sideways, you're kind of left in this point. It was like, well, if it's going sideways, clearly nobody's coming in to buy the heck out of this right now, but also the motivated selling is gone. So what am I supposed to do? Just sit and do nothing? It's like, yes, that's exactly what you're supposed to do. And it's the hardest damn thing to do. But we're looking at a significant jump in demand for uranium. And the big jump is happening primarily due to constrained enrichment in the West. I know we discussed that in the past a little bit, but that's going to cause a really big jump. So honestly, 2022, to take a snapshot, we're looking at 175 million pounds of demand, 130, maybe 135 million pounds of production, probably in the lower side of that range. Secondary supply, maybe 15 million pounds. The Western underfeeding's gone. So take out 10 million pounds there, but let's go 15 just to be conservative. What does that put us at? 150, maybe, with 175. And that doesn't include secondary demand, which we know Sputs purchased, 18 million pounds this year. So 175, we're looking at, honestly, probably close to 195 million pounds of actual demand this year between the reactors and secondary demand, and 150 in supply, secondary and primary. That's a 45 million pound deficit in a single year. Okay. So now with these rising tails with Western enrichers, we're talking about, a really big jump in demand that starts basically next year. I think it's really going to hit 2025 in terms of that big jump. We could be talking 210, 215 plus million pounds of demand. And this is the first year. This is year one of long-term contracting cycle. It's going to go for multiple years. So I'm very excited. I'm very aggressive right now. But the macro headwinds and crosswinds continue to buffet our sector along with others, and that's just how the market is right now.
Yeah, Rick Rule, he told me that the price of the metal, the price of uranium, is completely inconsequential to the operation costs of these reactors. He said when you take into account the lawyer fees and just all the overhead and the cost of making, building the plant and everything, whether this stuff costs $50 a pound or 200, they're still going to run it. It doesn't matter.
Yeah. I mean, there's definitely some nuance there, and I think that statement historically has been not as accurate in the United States because we have regulated and deregulated markets, and when nuclear reactors have to compete with previously cheap natural gas or highly subsidized renewables, then the cost of the fuel does affect those plants. But what's happened in the last few months for the states is a huge de-risking through the clean energy production tax credits from the Inflation Reduction Act. So we're actually seeing Holtec, which is the owner of the Palisades plant that was shut down a few months ago, apply for a second time back to the DOE for funding to get this thing back up and running. So this is a shuttered plant that was, on the margins of profitability and has some maintenance costs in order to get it back up and running. And the owner is saying, hey, now that we have these PTCs coming from the IRA, we're going to go for it again. I mean, that's huge. So these plants that were, let's say, on the edge of profitability, where a jump in uranium from $30 to $50 a pound makes a difference, and the jump in SWU, a doubling of SWU this year, it does affect their bottom line. It's not like it doesn't matter at all. Of course it does. That is the bottom line. And either those rates are passed on to the ratepayers, or if it's a regulated market, then they're not. And so now they have support from these production tax credits in the United States, which is a much bigger deal. Then you go to other countries where the reactors are strategic assets for the government, especially within a energy crisis type situation in many places around the world. And that's much more true of a statement that the cost of the fuel is basically irrelevant to maintaining the operation of these plants.
Okay. So about 195 million pounds demand this year, and with the supply that's come on of shy of that, about 45 million pounds. Forecast for 2023, 195 to 220.
It's, the forecasting for the demand is difficult because nobody knows what the capital market's going to do, and that clearly has an effect on that secondary demand, right? I think at some point in 2023, we're going to have risk come back on. The smarter than I macro people that I follow in the space, they continue to think that we'll see a Fed pivot at some point in mid to late Q1. So I think it's entirely possible we will see some sort of risk on and capital flowing into this sector in the earlier parts of next year. If that happens, we're going to see a lot of buying. With that said, we might see less volume purchased and more price movement because of the actual structural nature of the spot market now versus last year. We think a lot of pounds got unwound from the carry trade that helped to support the amount of pounds that spot was able to buy. Yeah. Whereas if the same amount of money flows into that vehicle, not only are we at a higher price now and are set to go higher, but the higher the price goes, it's the less pounds they're purchasing with the same amount of capital that flows into the vehicle. But also, if they come in for 1 million pounds and it sends the price up $3 or $4 in one shot, then we're going to see fewer pounds purchased, but a bigger move in the price. And I think that's what's going to happen in the next capital flows cycle. But structural demand, we should see jump up next year. I think we'll see 180 to 185 million pounds in actual demand from nuclear reactors. Secondary demand, who knows? I mean, I think a safe bet would be a 10 to 15 million pound kind of situation for secondary demand, but it's very, very hard to predict those capital flows and what that'll mean for actual demand. Supply is going to improve a little bit in terms of actual production because we'll have McArthur River coming back online. That's already kind of missing their targets for production for the fourth quarter for the year. The total year of 2022, they were hoping for 5 million pounds when they announced the restart. I think they'll be lucky to get 1.5 to 2. And then next year it won't quite be at full production, but still, we're probably looking at between Kazakhstan looking to increase their production, Uzbekistan is increasing a little bit, McArthur River back online. I would say we're probably looking at 145 million range. Maybe we'll get to 150 in total supply next year, which still puts us at a 30 to 35 million pound deficit with zero secondary demand. So still a very and then 2025, Langer Heinrich, some more US production coming online, ideally McArthur River at full production. Still at a deficit, but we get closer to that balance point. But the balance point is, it's not irrelevant. It's just the market doesn't operate on a just-in-time inventory snapshot of supply and demand. The uncovered requirements going out into the later part of the decade are huge for the global reactor fleet, and the long-term contracts are really going to snowball, in my opinion, starting next year with 114 million pounds signed in long-term contracts this year.
When you say secondary demand, you're talking about spot buying up more, or every time you purchase URNM, you're getting a little bit of spot there.
Sure, yeah. That would just be any demand that's not coming directly from a nuclear utility. So secondary demand this year, some of the pre-production companies purchased uranium and been trading uranium. So UEC and Encore Energy and Denison bought some pounds. I think that was last year, or maybe that was earlier this year. Then of course, spot is the big one. Then we have Yellowcake that buys $100 million worth of uranium from Kazatomprom every year. Next year, ANU Energy is going to be live. They are going to be IPOing in late Q2, I believe, or was it early Q2? Sometime in Q2. That is the new physical investment fund based in Kazakhstan. They raised, their initial raise was 74 million. They're doing a 400 million follow-on and then another 100 million for their IPO. So that's, at $50 a pound, that's another 10 million pounds. Yeah. And they're purchasing, they go first to Kazatomprom, and if Kazatomprom doesn't have or want to sell them uranium, then they go into the spot market. So we've got ANU, we've got Yellowcake, we've got spot, we have, hedge funds, and then we have non-producing companies or producing companies that will buy in the spot market, and all of that adds up to a basket of secondary demand. So this year, spot, I think at 18 million pounds for the year. Actual secondary demand total for the year is probably closer to 25 million.
Oh, okay. Yeah. Okay, cool. I like hearing that. All right. There are about 60 reactors under construction right now, correct?
Yep, there are 60 reactors under construction globally.
Okay, and the majority of those are in China.
22 are in China.
22 in China. We've got some in India, only 2 in America, right?
Yep.
China's kind of the big one here, right? Because they've got a, what is it? It's like 148 gigawatts by 2035 or something. What does that mean to the average person? I Googled a gigawatt and it said that it could power like 750,000 homes or something to that effect. Does that sound right?
Yeah, that does sound about right. Yeah, a gigawatt of energy, 1,000 megawatts. The average reactor size is around 1,000 megawatts. So Westinghouse's AP1000 is one of the more popular, light water reactors globally. That's a pretty common one. China's building a whole variety of different reactors. They currently have, I think it's about 52 gigawatts operating right now, and their goal is to hit 200 gigawatts by 2035. I don't know if they hit it. They're behind pace to meet that right now. So for example, with 22 online, I think they've got 2 or 3 set to connect next year. But if you look at going from 52 to 200 gigawatts in, 13 years, 12 years, that's 8 or 10 reactors a year. And they're not on pace for that, even though they are by far building more reactors than anyone. The Chinese generally think in decades. And of course, these are all state-owned entities that are building and operating these things. So there's no real NIMBYism in China. There's no, not in my backyard. They just do what they want to do. And they're forging ahead, not only building reactors, but building coal-fired power plants, et cetera. They're growing their baseload energy like crazy. Yeah.
Okay. Germany. Are they have three reactors at the moment, correct?
Yep.
And are those, have they come to their senses and they're not going to close them, or are they actually going to close these things, or?
So they were supposed to shut them down this month. They awarded the reactors a one-time temporary extension through April, just to try to bide some time and get the country of Germany through this winter with minimal gas supply from Germany. And they've been in a hard way. I keep seeing some posts on Twitter, people sharing a screenshot of the carbon intensity of the actual energy grid at any moment in time for Germany, and it'll show like the wind's not blowing, the sun isn't shining, and the bulk of their, like more than half of their capacity for electricity is in wind and solar.
Wow.
But when the wind isn't blowing and the sun isn't shining, there is deeply inefficient battery capacity for storage for that. And so they have had to drastically expand their coal-fired power to make up for renewables that are not operating, and the nuclear that they've already shut down. So it's unbelievably stupid. I think it's great that it's happening. Honestly, it's not great for the people in Germany,
Yeah.
but it's great for the world to see this is what happens when you spend $500 billion on sun and wind power. This is what happens. What do you get? More coal. That's what you get. So shut down nuclear, go renewables. This is the result. And it'll be the same result for anyone else who wants to do it. Now, of course, Germany is in the north, so their solar efficiency is terrible. Where, in the southwest of the United States, for example, the capacity factor for solar is something like 22-23%, and in Germany it's like 11. So it's really, really bad, and this is there for all to see. Now, there's some speculation that maybe they'll see the light and extend these plants beyond April. I'm definitely not holding my breath. Honestly, at this point, it's like the damage is done. They could come back. They absolutely could. It's a political decision. I mean, to quote Doomberg, whose content I really enjoy, the energy crisis is not a scientific problem, it's a political problem. And it's exactly what is happening in Germany. So it's brilliant for all the world to see, in my opinion.
Did you see the recent, the EU is trying to cap gas prices?
Yeah. Yeah.
That'll work.
Yeah. Oh, it's always worked in the past, right? No matter
Oh yeah,
what.
every time. Yeah, every time.
Price
Just
caps.
cap it, and then instead of getting expensive gas, you just get no gas.
Oh yeah.
Well
Windfall
done.
taxes, price caps, they're great. They work wonders for bringing on new supply.
I remember we talked about. I was trying to think what the next thing is. I think it was we were getting stimulus checks like candy, and then I was like, "What's the next step? Price fixing?" And now we're starting to see it.
Yep. It's perfect.
Okay, Cameco. Last time we were on with Cameco, any updates on Westinghouse? Any of that?
So yeah, I mean, Westinghouse, there's definitely been some news flow around Westinghouse. Cameco is not really talking much about it because of the deal. I'm sure the terms of the deal that is still working out and has not been, well, the terms are there, but they can't really discuss a lot of inner metrics from the company they're set to acquire a 49% stake in until the deal is closed. So there's a lot of financial metrics that everybody's anxious to hear about, primarily the profit potential for Westinghouse in their dealings with Eastern European run Russian designed VVER reactors. There's 34 of these in Eastern Europe that have a unique fuel design, fabricated fuel design. The fuel rods are like a unique hexagonal shape, if I recall correctly. And the Russians always made that most efficiently and cheapest. But Westinghouse has been able to make these for some time. They've had a tiny percentage of the market share of that particular fuel. But now they're likely to get most, if not all, of the market share from these countries that are going to be looking away from Russia for this fuel, in addition to probably other elements of the fuel cycle. So if they're going to be looking at Cameco for their fuel, they might as well get their U3O8 and their conversion there as well. Cameco doesn't have enrichment at this point. They've got a 49% stake in GLE, the laser enrichment, but that's many years away. So yeah, Westinghouse, they were awarded the contract to build the first nuclear plants in Poland. So they're going to build a couple, I think it was two, it might have been more, of their AP1000s. And yeah, I mean, the company is forging ahead on the nuclear front. They're very, very busy with all of their dealings in the nuclear world. And I think it was a really cool acquisition. Honestly, I really appreciate what Cameco is doing here. And I don't think they're necessarily divesting of their uranium mining aspect of their business, but I think it's basically a big bet on just, the future of nuclear, with Westinghouse being such an incredibly important player in the world stage for nuclear.
Cool. Okay, I'm going to share my screen here, and we can take a look at the charts. I got I subscribed to Jordan Royburn of the Daily Gold, and after 2 years of following him, I've never, ever, ever heard him talk about uranium. And in his weekly newsletter here, he mentioned uranium, and he thought that there was he mentioned URA in particular. He said URNM looks almost identical. URA made a double top, failing at $22 multiple times. It failed both the 200, 400 day moving averages. A decline below $18 could bring this to, let me put URA up there. A decline of $18 could bring this down to $13 to $14. So I think what he's seeing here is, a failure of around this line, and especially this one down here, which is just shy of 18. I think he's looking at the resistance going back here, which would bring it down around 13, 14 bucks. Is this a possibility in your mind, or is this unlikely?
I would say it's unlikely, but anything's possible. I mean, nothing would surprise me anymore,
Okay.
especially when it comes to technical projections. I think there's some really interesting patterns on a lot of the charts in this space. So I've been looking a lot at weekly charts and looking at the 200 EMA on the weekly, that is rising, and most of these stocks in the uranium space are coming down and sort of chopping sideways right at or just above that rising 200 week EMA. And there's a lot of interesting historical analogs for breakouts after bouncing along that 200 EMA for the week. And so that's something, I mean, that's obviously my long and bullish bias, which, is probably clear at this point. Basically for us, focusing so much on the fundamentals and the nuclear fuel cycle, I think it's highly, highly unlikely that we're going to see prices for uranium falling. But if uranium moves sideways and we have a liquidity event across markets, I think we could see that. I don't think weak, boring action like we're seeing right now is going to take us to 13 or 14 bucks. I think it's going to be a COVID March 2020 liquidity type event that would bring us to that level. Okay. Does that happen? I have no idea.
Yeah, no one can see that. That's
Yeah.
why they call them black swans.
Yeah. So, I mean, there's plenty of people thinking that without being specific, strangely, about what that could be, something breaking is going to be what triggers the Fed to pivot. What that something is, I don't know, whether it's a market crash or a credit situation. That is certainly possible. These are things that are impossible for me to predict. So I have no idea. Seeing URA at 13, 14 bucks, I don't see that lacking some kind of, severe liquidity event. And that's, that's always possible. It's always possible. But, I know where uranium is going. And so I tend to think that if we start to see the price move, that's been one of the big things in the past few months, is this typically strong seasonal period with the price flat has caused a lot of people to capitulate and to just kind of give up. Like, this isn't working. The price isn't moving right now when it should be. And oftentimes it doesn't. It tends to move when we don't expect it. So hard to predict the short term, but I think honestly for 2023, I expect we'll see much, much higher uranium prices. And I think that the equities will follow suit if that starts to happen.
Okay. Yeah. Okay. Got a couple of listener questions here. Carl asks, after watching the Netflix special 3 Mile Island, can that happen again? What are the risks there? So can you just kind of run through real quick what happened at 3 Mile Island back in the 80s, so everyone knows what?
Sure, yeah. Yeah, I'm happy to. So, along with the Chernobyl series, the 3 Mile Island series was pretty fantastical to just in order to get as many views and clicks as possible, right? Just like everything is so, there's such a starvation for views and clicks and so much competition now that they make things a little bit more fantastical than they necessarily were. So 3 Mile Island, interestingly enough, the containment building for that reactor vessel worked as it was designed. There were 0 deaths. There were 0 proven illnesses from radiation events outside of the reactor. In fact, the other reactor at that site continued to operate until a couple of years ago, and it was shut down. And so can that happen again? Of course, there's always a chance that there can be, a partial meltdown or an entire meltdown within a containment field. That's what the containment dome is there for, to contain it, which it did. So is that possible? Yes, of course it's possible. Yeah. Is it likely to happen? Every time one of these things happens, there is a massive revisit of safety protocols for reactors around the planet. I mean, that was the true blessing from the Fukushima Daiichi accident, was a revisiting of safety protocols for every single reactor on planet Earth when that happened. And even Fukushima, as bad as it was, which was worse than 3 Mile Island, because it actually, there was a radiation event where some radiation was released, also 0 deaths. So the 2 most prominent accidents in people's minds besides Chernobyl resulted in 0 fatalities, which is kind of interesting. Chernobyl obviously did result in, I think it was 50 something fatalities, which was, and Chernobyl was bad, but that was a reactor with absolutely no containment around the core. And so Chernobyl happened again? No, that will never happen again. Will there ever be another, partial meltdown of a reactor core in one of the 450 operating reactors around the world? I think it's probably highly likely that it happens. Will it be contained? Yep, it will.
Okay. All right. A couple of companies. Jenny asks about Denison Mines. What are your thoughts?
I love what the company is doing with their ISR project at Phoenix. I think they are firing on all cylinders. I give them a lot of credit for thinking outside the box in going after this and attempting to get ISR done in the Athabasca Basin in geology that was previously thought to be impossible to host that type of mining.
Because it's so far down, right?
Well, it's because of the type of geology. It's basically there's so much. So typically with ISR, you have to have a permeable ore body that's contained at least on the bottom, if not also on the sides, by an impermeable ore body. So you have to be able to,
or something, you mean?
Yeah, you have to be able to inject fluid and extract it from another well that's 10, 20, 30 meters away without it escaping into the rest of the aquifer. You have to be able to extract it across the ore body and pull it up out of the extraction well. And so it requires a certain geology in order for that lixiviant, the fluid that extracts the mineral, to not just basically get lost into the aquifer. It has to be able to come down and be extracted across and grab uranium as it does it. And so they've been able to contain it with these various, I don't remember what they're called, I think freeze wells. They basically created a synthetic perimeter, like a wall around this area, and then did a series of wells within that zone that they created. So it's brilliant. If they can pull this off, we're talking like way less than $10 cash cost, like $5-6 a pound to produce in this extremely high grade. So they nailed it. I mean, their field tests were even better than their core tests. So the field test came back like 97% extraction, higher head grades. And then they were able to return the aquifer to the same pH levels that it was before they even did their field test. And they did that in a matter of weeks. And so their environmental impact statement is being reviewed, and that takes a while. It's like a 2-year process, and it's all, we're 2 months in. So that can take a while. Canada's talking about trying to fast track some of these mining projects for the sake of energy security. So maybe it happens a little bit faster, but they pulled it off, and I love it because the market doesn't care at all. Care at all. Yeah. And that's when I get really greedy.
They're kind of in the boring stage of this, right? Because they're just waiting on this 2-year permit, and they're, like you said, they're only, they got another 22 months to go if it goes on schedule, right?
Yeah.
So this is kind of where people become uninterested, and the stock can get pretty cheap.
Yeah. Well, I mean, the EIS, The EIS can take up to 2 years, so it
Okay.
could come in faster and surprise the market. And there's plenty of other elements to this process, so it's not like they're just going to be sitting around twiddling their thumbs and waiting for that. There's more that they can do on this development, but I think I give them a lot of credit because we're already starting to see it. We're going to see it way more. These little tiny exploration companies in the Athabasca are going to hit something that's the grades are nowhere near Phoenix, and they're going to say, oh, but it's ISR amenable. Like just because Denison pulled it off, like all of these other projects, and to some extent, maybe there's some truth to it. They've shown that it can be done. So now that it can be done, maybe someone else is going to do it. But I give them a lot of credit for thinking outside the box and going for it. Yeah.
All right. Joe asks about Paladin.
What about him?
He just wants to hear your take on it.
I mean, Paladin's, restarting their Langer Heinrich mine, so they're a historical producer. I think that they're a relatively large cap within the space. And I think the story is pretty known. I don't expect a lot of surprises, at least not to the upside for Paladin. Good name recognition, good liquidity. I mean, there's really not much to say about Paladin besides what everybody knows about Paladin, which is they've got, I think it's, I can't remember if it's CGN or CNNC that owns 25% of the mine. And so they've got that offtake. I think they'll be producing 4-ish million pounds a year, or maybe it's up to 5, but then 25% goes to the Chinese. So yeah, it's expected to be producing 2025, or excuse me, 2024 for Langer Heinrich. Yeah.
Okay. Uranium Royalty Corporation. They're pretty cash heavy right now. They're basically kind of sitting on a pile of money waiting to deploy it, correct? Like, how do you feel about them at the moment?
I think it's an interesting play because when they first started doing their thing, I think it was at a time in the uranium market where you could argue that owning royalties in uranium production was pretty much a worthless pursuit. That there was not a whole lot of hope for future production of most of the royalties that they held and probably do still hold. Now I think in the last 2 years, we've seen kind of a renaissance and a whole rethink on nuclear, and so many countries are restarting or expanding or coming to nuclear for the first time, like Poland. And I think that the future of nuclear and near to midterm production is so much brighter than it was even 2 years ago. So I think it's a really interesting play.
Okay. How do you feel about UEC, Uranium Energy Corporation? They just got Rough Rider, right? How do you feel about them?
I mean, I want to shy away too much from company talk just because that's what we focus on in our newsletter besides fundamentals and actual stock picks. But I think it's interesting. They're obviously going for kind of a roll-up strategy. It seems like they're looking at a pounds in the ground strategy. Certainly worked in the last market. If you're looking at production profiles, I think it's a very expensive stock compared to peers. But their strategy is a little bit different. They have some near-term production stuff in Texas, but it seems like they've been going after a roll-up, pounds in the ground kind of thing. I thought their acquisition of Uranium One assets was brilliant. I thought the Rough Rider Athabasca stuff, UEX stuff was strange.
Okay.
But I get where he's going. And, if this market goes absolutely crazy, that's one of these things is like, you can sort of gauge where the market is going to go based on the actions of the people that have been operating in this market for a long time. So looking at what Adani is doing with UEC and rolling up, that's not something that somebody does if they're expecting a choppy or a bear market. You know what I mean?
Yeah.
That's something that you do when you think that the market's going to go absolutely bananas, because then you get companies with the valuations of $5, $10, $15 a pound in the ground on projects that will never see the light of day. And all of a sudden you've got a $5 to $10 billion market cap company that's producing a couple million pounds a year in Texas, but they've got who knows how many pounds in the ground at that point. So, things like this are tells to me, like seeing what some of these companies are doing. They're expecting a euphoric kind of mania sort of thing again. I'm not saying that's going to happen, and I'm not saying it's going to happen anytime soon, But judging by what some of these companies are doing, and that's one of them, he's clearly planting his flag and placing some bets that maybe don't make a whole lot of sense right now, but I think he probably knows what's going to happen in the next few years.
Smart guys running it.
Yeah.
Okay, that's it for the listener questions, except for two people in the last like 24 hours have asked me about hydrogen. And I'm like, man, I've never bet on hydrogen. I wouldn't even know where to start. Like maybe I don't even know if there's an ETF for it. There probably is. But then I got to thinking about it and I Googled it. And I think what they're asking about is the new fusion breakthrough. Can you kind of go into that and at least set the stage that this is probably not something we're going to benefit from for at least a few decades?
Yeah. So the fusion thing, I hate to quote Doomberg twice in the same interview, but he wrote a piece about, following up on that fusion breakthrough. And it was an interesting take. It was basically like being pro-fusion in some cases is actually kind of this backdoor means of being anti-nuclear. And so it basically, the fusion breakthrough has mostly only downside for nuclear, and not really a whole lot of upside, because if people have fantastical hopes about the timelines for commercially viable fusion energy, they might actually use it as an excuse to be anti-fission. And so, yeah, this breakthrough is interesting, and net energy gain, coming from basically exciting I believe, what is it? It's a hydrogen atom, with a laser, essentially.
Yeah.
But
They shoot
they're
energy into it and it puts out
yeah.
more than they shot in.
Yeah, that net energy gain is almost like a levelized cost of energy assessment of solar. It's like, oh, solar is really cheap because you got this amount of dollars per kilowatt hour. It's like, oh yeah, well, that's when the sun is shining. You're not calculating the battery backup or the coal or natural gas backup. When you calculate that in, the ERI of solar goes down to like 1 or 2, instead of 7 or 8 when it's unbuffered. But I digress. So fusion, seeing a net energy gain by the excitation of that atom with a laser is cool and has promise, but you have to take into account the amount of energy that it took to actually produce that laser and to produce that facility, and then get that reaction to happen over and over and over in perpetuity to create that, energy. I mean, the energy density in uranium is a geological, chemical miracle, basically. And so I tend to be in the there's no such thing as free lunch kind of camp with almost everything. And there's trade-offs to get that energy density from uranium and fission, right? I mean, you have to build a very large, very expensive sunk cost facility. You have to mine it out of the ground. You end up with, radioactive waste, which is, not a problem in my opinion, especially compared to what most people think it is. But there's no trade-offs. I mean, there's no such thing as a free lunch. There's big trade-offs to have that. In exchange, you get very clean energy, a very long life asset, and it's baseload. And I think it's wonderful. And I think the answer is right in front of us for our clean energy needs. I think foregoing any expansion or revival of fission nuclear because you think that fusion is going to be a holy grail in the next decade is an extremely dangerous error that could be made. So will we see fusion energy? We saw Secretary of Energy Jennifer Granholm come out and say the DOE is looking to have commercial fusion by the end of the decade. It's like, that is absolutely not happening. So to put it into context of this conversation and the uranium bull market and the future of nuclear, this has absolutely no effect on it whatsoever, especially in the short and the midterm. Long term, if we can have fusion energy in the 2030s, 2040s, and it comes to fruition, I think it's brilliant and it's fantastic for humanity. Do I think it's going to happen? No, I do not. Hydrogen, I'm not an expert on hydrogen. My understanding is hydrogen is not an energy source. It's a means of storage of energy, and it can be produced with electrolysis. And so there's a lot of talk about using advanced nuclear and SMRs to actually produce hydrogen kind of as a byproduct of that electricity production. A lot of promise. NuScale came out with some news earlier in the week, teaming up with I don't remember who to look into producing hydrogen through their Voyager SMR reactors. And there's a number of other SMR designs that are looking at doing the same. So if you can create hydrogen via electrolysis, via excess energy from a nuclear fission, then you have this kind of extra little piece of energy you can utilize for vehicular transport or whatever it might be for the usage of that hydrogen. It's not an efficient means of energy if it comes from electricity that's not nuclear, basically, is my short and dirty take on it.
Okay. I saw the same thing from what little research I did. Like, this is something that maybe we'll see your children and mine might see,
Right.
but probably not us.
Yeah, no, I think
Certainly
it
shouldn't affect
promise.
our uranium bed here, I don't think.
I think it holds promise, and I think, you know, hydrogen is along with electric vehicles is something that the sort of the green movement, environmental left sort of look at as being, you know, the future, the future of transportation. So to the extent that we can attach the hydrogen story to the nuclear story, I'd say it's all good.
Yeah, yeah. Cool. Right on. Well, thank you, Justin. And if you want to check out more Justin, go to uraniuminsider.com or check out his YouTube channel, Uranium Market Minute. There's probably 70 or 80 uranium companies that you can invest in. A lot of them don't have a whole lot of value, but Justin narrows down the ones that do so that you can bet on them. And yeah, thank you again, Justin. You have a great rest of the day, sir.
My pleasure. Happy holidays to you, Steve.
Happy holidays. Take care.
Cheers.